The market is very much looking at 2025. You have guided for another record year in terms of revenue. What's going to drive that in your view?
Well, I think if we look at 2025, I think we have said that AI has created a major shift on the market. So AI is going to continue to drive the market in 2025. And indeed, we have guided for another record year next year. We have given a certain range because we still have some uncertainty on how well AI is going to do, but AI is the driver at this point of time.
And the backlog you've also quoted as 36 billion euros approximately. Again, where is that above your expectations, and where is that backlog sitting at this point?
Well, I think the backlog is now supporting 2025 pretty nicely. So we have seen some of our customers really committed for their capacity next year, which is a very good news. To remind you, we still see a bit of a shift in the market and two different camps. The AI customers are doing very well. I think they are bullish. We even see some upside opportunity there. But some other customers that are still trying to catch up this AI opportunity are not doing as well. So that's why we're all a bit still careful and providing a range for next year.
Yes, so you mentioned that range and the potential uncertainty. What are those specific uncertainties as you see them?
Well, the first one is how strong AI will continue to go, right? Is the market still very hot? Everyone investing as we've seen it in 2024. If this is happening, we see some positive opportunity. The rest is the rest of the market. So there, I think in 2024, this has not been great. In 2025, there's still a lot of uncertainty. And if we see our customer hesitating, if we see the market, the overall industry hesitating, I think then we have a bit of a risk there.
And so as we talk about uncertainty, I think we have to mention the DeepSeek story over the past few days. This Chinese company has come out and talked about training these large language models on what people see as less advanced semiconductors and with less resource as well. Many have questioned whether this will mean less CapEx spending from the big players as well in terms of on AI infrastructure, and that will trickle down the supply chain as well. What's your read?
Well, I'm not a model expert, so I'm not going to comment on the model itself. But what we said in our Capital Market Day is that AI is creating a shift. It's creating a huge opportunity if you look at it moving forward. So what we expect in the next few months is that a lot of people will want to grab this opportunity, will want to play in this business. So we are going to see a lot of new players, and that's maybe what we saw this week. The other thing we said is that for AI to really come to life in the next few years, not only with the hyperscaler, but with all of us in our phone, PC, we need AI to address two things: cost and energy consumption. We believe that anything that will go in the direction of lowering costs of AI is in fact most probably good news, because this will allow the application to go to many, many more devices. So we expect, I will say, a lot of activity around AI. I think a lot of news, and this could be confusing at some point for people who watch this industry, but that's a great opportunity. So I think everyone should expect that a lot of things happen in the next few months.
So in terms of the sort of CapEx story more specifically, you don't expect massive changes in the CapEx outlook, particularly from hyperscalers and also from some of the large semiconductor players like TSMC as well?
Well, I think for the hyperscaler, the CapEx is today spent for investment. They are investing heavily in R&D. I think they want to continue to do that. I think you have to ask them if their mind is changing on that. When it comes to the people who make chips, again, a lower cost of AIs could mean more application. More application means more demand. And over time, we see that as an opportunity for more chips demand.
But just over the past 3 days, have you had any calls from customers asking questions about what's happened over with DeepSeek and what impact that will have on them?
Well, I think there's a lot of discussion around it because, of course, what we see is that people maybe can come and innovate. So this creates a lot of buzz. We didn't get any call from customer. We always look at the long term when it comes to this industry, and we try to not get too excited by the short-term variation.
Can we just talk about China a bit, Christophe? A very, very important market for you as well. Just given the new administration in the US and the continued geopolitical tensions between the US and China, Are you, at this point, expecting any further restrictions in terms of exports of your equipment to China, particularly on the DUV side of the equation?
Well, I think what we expect is that this discussion will continue. I think that the tension between China and the US, we've said it a few times, is most really there to stay. That we expect. In which form this may come, we don't know, to be honest. I think there's been a major change in the US administration. We still have to see, I would say, how they will address this challenge. So I don't think we expect anything. I think today we don't know. But we are very much engaged, of course, with the different governments, so to make sure that we can be part of that discussion when this discussion will happen.
And one of the interesting developments we've seen over the past year and a half is Chinese manufacturers' ability to manufacture slightly more advanced chips now at 7 nanometers using sort of legacy equipment as well. What kind of demand are you expecting from China this year? They are a large part of your business on a revenue basis.
Well, I think, China has been very strong in 2023, 2024. That created a lot of question on the exact size of China. This was driven mostly by the fact that we had a huge backlog in China at the end of 2022, because if you remember, 22 was a year we couldn't feed the market with all the tools the market needed. This has kind of been absorbed last year, so we go back to more normal ratio. So China, part of our business ratio will become closer to what we used to see before 2023. That demand will continue because China, as you know, is still focusing on developing what we call mainstream semiconductor. The demand is still very strong, and today China is the main place for this type of semiconductor.
So are you expecting growth in China to slow down as it normalizes?
We expect the ratio of our business in China to be lower than what it has been for sure in 23-24.
Do you think China will be able to continue to sort of bring down or advance in its chip production, even with some of the legacy machines? So we've seen 7 nanometer chips. Do you think they'll be able to progress to 5 and 3?
Well, at some point of time, physics is physics, and I think the world, the customer in the Western world has demonstrated that without EUV, going beyond 5 nanometer in high volume manufacturing is extremely difficult. So you can always, of course, make a few chips, but to do that at the right cost, at the right volume, is very, very difficult. And I think if you look at some of the story of other key players in the US, in Taiwan, of course, they have demonstrated that.
And geographically as well, Christophe, when you look across the world, we see the US, and we saw the recent announcement with the Stargate project, this $500 billion infrastructure project in AI. Of course, a large part of that is going to have to revolve around the chips that are going to power some of that as well. Where are the markets where you are expecting, this year and certainly into next year as well, the biggest demand?
Well, we've been talking in November about AI everywhere moving forward. This is why we're so bullish about AI. AI technology provide opportunities for many, many applications. And what you see right now is a bit of a race to make sure that, the major companies are all capable to have access to the training computer they need to develop those applications. So I think this will happen everywhere. We have seen major companies, but also countries really investing to get access to the technology. Then there will be a phase where people use those supercomputers to develop their product. And those products will mostly come up in the next 2-3 years. And there, I think they will fuel again the demand from all the people who make chips. And today, that's still, of course, a lot Taiwan. I think the US is picking up. A bit Europe, but this will come from our usual customers.
And the Stargate project, are you going to feel any immediate impact from that in terms of pickup in orders or?
Well, I think, those orders are being integrated over time. So, of course, the order for the chip themselves will go most probably to a company like NVIDIA or one of their competitors. These drive demand at our customer, either TSMC, Intel, Samsung, which as a result drive demand for us. But also there, we work with those partners on a long-term view. So we're trying to plan the capacity for the industry years ahead. So yes, this fill, if you want, the pipeline. This is good news. The more demand, the better the opportunity for us moving forward.
Christophe, can I just pick on some of this sort of technology going forward, particularly around EUV at this point? I noticed in the report that EUV sales declined slightly in 2024. Should that be a concern for the market?
Well, it's directly related to the ramp profile of our client. So if you look at 2024, for example, we didn't see a major ramp in logic. We see that starting in 2025 with 2 nanometer. So in many ways, we follow the cycle of the market. And some year will be stronger than other. So yes, you will have cycle. But if you look at how much EUV is being used for a certain amount of chips being made, that number is increasing. Right, so you will see the cycle maybe on the market demand or the capacity ramp. But when it comes to the use of EUV, as we mentioned in November, we see that continuing to increase moving forward.
And there's been a lot of focus on high bandwidth memory and memory more broadly this year, and the hope that there may be a revival of that market. Is that something you're anticipating as well?
Well, memory has been stronger in 24. We still expect memory to be strong in 25. We see, of course, a major drive with a high bandwidth memory because you have to feed basically those super computer with the right memory. So that dynamic is still positive as we speak.
Christophe, we see challengers trying to come up with an alternative to what ASML does. You have, for example, Canon in Japan and others as well. Do you at any point see any viable alternatives that can challenge your business in which you hold an extremely strong position?
Well, I always gave the story when we chose to do EUV. This was more than 20 years ago. And we had a choice between different things, nano imprints, E-beam. These are the usual technology being mentioned. We picked EUV not because we knew how to do it, but because we thought this was the only technology that could scale over time in terms of performance and cost. And we spent, as you know, many, many years to make it work. So this was a real challenge. But today we are very happy we picked this technology because, this industry is about cost, it's about performance. And it's not enough to have a tool today. You need to be able to have a tool in 20 years from now. And today EUV allows us to really look at the next 10, 15, 20 years with the belief that we can continue to improve our product. So we are very happy with our choice. And the rest, I think, is very difficult.